Hey guys, this is Justin from breakintocre.com, and in today's video what we're going to do is talk about real estate interview exam topics that you might see on a real estate technical interview exam. So when you're applying for analyst or associate jobs in private equity real estate, just writing proficient in Microsoft Excel on your resume won't usually cut it anymore. So during the interview process, many real estate investment companies will give their potential hires a real estate financial modeling interview exam that tests their knowledge and ability to analyze and model real estate transactions. So the question is, what should you actually be prepared for on interview day, and what are you going to need to know to be able to ace one of these interview exams? Well, that's exactly what we're going to cover in today's video. Now, in my experience and the experience of my students, generally what you're going to see is 5 different parts of a real estate financial modeling interview exam, which are all going to test different parts of your ability to do the technical parts of the job. So what we're going to do in this video is break down each of these 5 things and some potential things that you're going to need to be able to calculate in each of these. So number 1 is basic Excel functions. So companies want to know that you understand Excel and you're able to create dynamic formulas in Excel to create models or modify existing models that they have at the company. So this could be just knowing simple Excel functions like HLOOKUP and VLOOKUP. This is also including if statements and maybe if, and or statements all pulled together. This also includes present value and future value functions. So figuring out what the future value of an investment is going to be, figuring out what the present value of a future stream of cash flows is going to be, and potentially calculating the monthly payments on a real estate loan. Now, as far as Excel functions are concerned, you're also likely going to be required to be able to use the formulas and functions that can either discount cash flows or calculate investment returns. So functions like the IRR and the XIRR and also the NPV and the XNPV are likely to be things that you'll be tested on an interview exam. You also may be tested on things like creating data tables to create a sensitivity analysis for different scenarios on a deal. Now, number 2 is real estate finance modeling. So this can include things like modeling key loan metrics like the debt service coverage ratio, the debt yield, the loan to value and loan to cost ratios, and also modeling loan payments like I talked about in the Excel functions. Now, these companies are also going to want to know that you can model investment return metrics that you're going to be using on a day-to-day basis. So not only does this include the internal rate of return, but this will also likely include the calculation of an equity multiple and potentially a cash-on-cash return or average cash-on-cash return of a deal. Now with this, you'll also likely need to be able to calculate things like cap rates and also monthly and annual growth for revenues and expenses to be able to model out future projections for the cash flows of a real estate deal. Now number 3 is commercial real estate lease modeling. Now it's not likely that in your interview exam, you're going to have to build an entire dynamic commercial real estate lease model from scratch. That said, you are going to need to be able to demonstrate how you can actually calculate these things on a piece-by-piece basis. So many companies will expect you to know things like how to build out future rent calculations. So if rents are $25 per square foot today and they're expected to grow at 3.5% per year, what are those rents going to be in year 4 or year 5 or year 7 of the analysis? You'll also likely be tested on your ability to model renewal calculations. So what that means is that if you're given a lease that is about to expire and you're given a renewal probability on that lease and then some market leasing assumptions for a new and renewal tenant, you're going to need to be able to use that information in order to create releasing cash flows for that tenant. Now, you're also likely going to be required to make some expense reimbursement calculations. So you'll need to be able to calculate things like triple net expense reimbursements, full service gross expense reimbursements, modified gross expense reimbursements, and even a base year stop. Now, as far as commercial real estate lease modeling is concerned, you'll also likely have to build out things like tenant improvement allowances, you may have to calculate leasing commissions, and you may also have to be able to calculate percentage rent if you're going to be working for a company that invests in retail properties. Now, number 4 is real estate cash flow modeling. So at this point, companies know that you know Excel, you understand real estate finance, and you understand commercial real estate leases. How do you actually package all of that up together and create some cash flows that are actually usable even if they just give you a basic rent per square foot and expense per square foot number and some additional information around that. So likely what you're going to have to do is build out some sort of a basic model based on some inputs that the company is going to give you. So this may be a purchase price, this may be the rent per square foot and the expenses per square foot, this may be some sort of a vacancy factor, you may have rent growth in there, and then you also may have loan metrics and exit metrics like the exit cap rate assumption as well. Now from that, you'll need to build out a dynamic set of cash flows that can change as you change those manual inputs, and then you'll need to calculate some return metrics based on those cash flows. So again, things like the IRR, cash on cash return, and equity multiple are likely to be things that are covered on that exam. Now you also might be asked to value a property based on a certain return. So the exam might ask you to find a valuation for a property if you're looking for a 15% internal rate of return over a 5-year period, something along those lines. You'll need to be able to calculate what that purchase price needs to be in order for the company to hit those returns. And then finally, the last piece of this, if you are going to be working with a company that invests in office, retail, or industrial properties, you may be working with a software called Argus. And generally, what companies will test you on with Argus tends to be the Argus export and then manipulating that data. So Argus is a real estate cash flow modeling software that allows you to add a bunch of inputs. They'll do all of the heavy lifting as far as calculating everything with those leases and calculating the net operating income based on renewal probability and a lot of more complex functions that you'll have in a commercial real estate lease. And then within that software, you'll be able to export into an Excel file. And usually that Excel file is dumped into the company's own proprietary Excel model. So likely what you're going to be tested on is your ability to take that Argus export, manipulate that data, and really understand what that data is telling you. So you may be required to, again, solve for the internal rate of return, the equity multiple, and the cash on cash return based on those Argus export cash flows. There also may be some more qualitative parts of this in this part of the exam that test your ability to take a look at a set of cash flows and analyze that set of cash flows to tell a story about the project. So this may be answering when the property seems to be stabilized and when those cash flows seem to be stabilized. This may be talking about what kind of reimbursement structure it appears is in place at the property based on what you see in the cash flows, and things like that that are more qualitative in nature and aren't necessarily asking you to calculate a specific number, but just asking you to analyze the cash flows. So there you have it. Those are really the 5 main categories of things that you're going to need to know on interview day if you have a real estate financial modeling interview exam when you're applying for your next job. Now, if you want to get more into the weeds on any of this and actually do some real estate financial modeling interview exam questions, I've put together a course specifically for this reason with over 100 real estate financial modeling interview questions that you may get on interview day, and we'll walk through how to do each of these step by step in that course. So if you have an interview exam coming up, or you just want to be prepared for the next job interview that you go on, I would definitely recommend checking out that course. Now, if you're just dipping your toes in the water and you want to understand a little bit more about real estate financial modeling in general, I also have a free real estate financial modeling crash course that you can grab in the link in the description below. So I'll link both of those things down in the description. Now, if you like this video, please let me know by hitting that like button, subscribing to the channel, and sharing it with anyone else who might find this helpful. Thanks so much for watching, and I hope to see you in the next video.